Business FM.
The Morning Drive on October the 14th. It's the 9th World Environmental Education Day. Just a thought, a reminder of how important it is to educate people of all ages to understand the environment around us, our impacts and the consequences that we have on the planet that we all share. That's today. We've heard from Jeff Rhodes this morning. He was talking gold on the programme, and we'll be talking to Jeff again on Friday as gold, as I've been saying, continues its rally. Joey Chaya, a little bit earlier with the new Pets app. It's Pet Bay. It's an attempt to put pet owners in touch with reliable and trusted pet sitters. So if you are an animal lover, to put your mind at rest, I think. This is MIRA Business FM. You can find us on the website. mirabusiness.fm is where we are there. You might be watching and listening there now. If not, it could be on YouTube, could be on Twitch. You might be with us on LinkedIn, on Facebook, on Instagram, wherever you are. You're welcome. whatsapp.mira.fm to get in touch, subscribe, and let us know how you feel. Now, I said last week, IT and digital hygiene guru, our investing guru, Muzammil Shaikh is with me. Nice to see you.
Hi, Tim.
Good to have you here. Our tech and investing guru, that's how I'm going to label you this week. Every week we'll try and come up with a different label for you, Muzammil, so you can go home and say, so today I was the, I don't know, shoes guru or something. We'll see how it works.
Changing with the times.
Yeah, absolutely right. I'm not sure where I'm going with this. But look, digital hygiene was what we talked about last week. And it was an interesting discussion, actually. It's not really a phrase that I've really spent a lot of time thinking about, but it's really, really important how to make sure that your online presence is safe and clear and clean and all of that stuff. Today, change of tack, Muzammil, investing, the risks of each major asset class. So I thought, we've got, 9 here, 9 different topics to talk about. So I guess around about 2.5 minutes on each. Let's start with the definition, and then we'll talk about the risks of investing in that particular asset class. And I want to start with money, which is an asset class in and of itself, hopefully, if you've got some. We don't really need a definition of money. We're all kind of au fait with that. But what are the risks of using that as your main investment channel?
So money, which is, I mean, some people call it cash, some people call it money. It's basically, I mean, we don't have much time because it's a rapid fire session, effectively.
Sure.
And what I'll say is that it's effectively credit. It's not money. People think it's money. It's the bank's liability. And even though you're using it, it's basically your asset, their liability. That's how it works. It's a note. It's a promissory note. There's nothing backing money except the faith of the government. And the way it works is that a bunch of people decided a long time ago, we're talking about hundreds and 4 years of paper money, that, okay, I choose this to be money and this is money. Fiat money, what we call today, is by decree. Fiat means by decree of government, and the government has decreed it as such. Prior to 1970s, this was backed by gold. It used to be gold backed. No money on earth at the moment is backed by anything except for the full faith of the government. Effectively, you're trusting the government that they will not print more of it, but that's what it happens every year. That's how inflation happens. The other asset classes which we'll talk about are not gaining value. It's actually the base fiat money losing value to everything. So that's basically the short answer to money.
Okay. And inflation, of course, if you don't do anything with your money, you just keep it in the bank over time, effectively.
Because they're printing more of it, basically.
Exactly. But you lose money, don't you?
Right.
If you leave money in the bank for 5 years, you may get a little bit of interest, but it's very, very hard to keep up with inflation. In fact, essentially
50% loss. Any car you bought in 20 years ago is now 50% more expensive. That's
okay. Equities, stocks. Let's start with a quick definition, and then talk me through the risks.
Equities are effectively a portion you're holding a piece of the company.
Yep.
It could be a share. The word stock is referring to a single share of a company or shares, multiple shares. What are the risks around it, basically? It's all counterparty risk, effectively. Everything is a counterparty. And you're trusting the company to be okay. You're trusting the government to be protecting your rights around the mechanism, around trading it. And everything is about liquidity. People don't think that, okay, if I'm holding a share of the company, it's fine. Even biggest companies in the world have had major crashes because the company itself cannot control the price of the stock. It's the market. It's always the market controlling the price of the stock. They say, oh, it's a cash flow producing asset. Yes, it is, but there's no, I mean, there are very few companies giving dividends. A long time ago, they used to give more dividends. Then the government figured it out and they added more taxes to it. That's why that they stopped doing dividends and they do stock buybacks, effectively shrinking the liquidity of the stock, creating more value for shareholders, basically. That's how it works. The risks around it are many. You cannot have access to it. You cannot have access to brokerages if you're a sanctioned nation. And literally, you can just panic sell the damn thing, if you're not sure about it. So even though if it's a good stock, people have sold Tesla because they were not happy for the way it was working out. Again, whatever the company is doing has independently, it's affecting the price of the share. That's the difference. People assume that it's a direct correlation. No, it's the people deciding it, not the company itself. Cannot have any impact on the price of the share.
Oh, Tesla's a good example. If you look at Elon Musk recently, heading back to Tesla after, however you look at it, perhaps questionable activity, things that people didn't agree with, but that has a very real effect on the share price.
Everything, and geopolitical risk, macro risk. Basically, you can lose access to everything. They can cut you off because you're a certain nationality. People think that there are many layers to it. We don't have time to go into it, but these are the biggest risks because today we are highlighting all the risks of all the asset classes.
Okay, so equity stocks, as quick as we can. How you pick a good stock, that's a very different conversation, so I'm not even going to go there now. Bonds, definition first of all, and then the risks.
A little bit to the stock thing. ETFs or funds are basically holding the shares and stocks themselves. They are part of it. They are the downstream element to it. And you're adding another layer of counterparty risk. So you added the government risk or the company risk and then the brokerage risk. Plus now you're asking, hey, why don't you hold on a bunch of shares from me and I'll trust you, and you're buying the shares of the fund. You're not buying the shares of the company.
Yeah.
And then, of course, what ends up happening is at the moment, the biggest three companies own most of the assets in the world: BlackRock, State Street, and Vanguard. And they end up owning everything. That's why you see these weird YouTube videos. They say, oh, these companies own the world. They literally do own the world because you own the shares to the fund. You don't own the companies, and you lose all your voting rights, by the way.
Okay.
This is the biggest thing people don't understand. Of course, again, access can be taken away from you. It's if you live in a developed economy, you have access. If you don't, you can't have access unless you have access to your local stock exchanges like the Pakistan Stock Exchange or whatever stock exchange, which are allowing you to continue trading. Of course, there are very small markets compared to the US market.
Okay, let's just very quickly define those two particular asset classes: ETFs, exchange-traded funds, mutual funds, just before we move on to bonds.
Mutual funds are the older vehicle which used to be used before ETFs. They are effectively a more expensive wrapper. They're not required anymore. They have benefits in the US, not so much here. They're always usually more expensive price-wise. ETFs they trade like a share on the exchange, but are actually holding. It's a fund, but the price of the share, which both of them have, by the way, price of the share is also existing in the mutual fund, but it settles end of the day. Versus the ETF share price, it's fluctuating live throughout the day. It's trading like a share. So this is one more thing they've added, that you can literally trade a fund like a stock. It adds another volatility layer to it, which people don't understand. And of course, one more thing, if you're holding shares to, let's say, a different time zone, the fund will adjust itself the next day, by the way. This is what people don't understand, that it's showing a different price. So that's another thing to get your head around.
There's a lot to get your head around, Muzammil. That much is clear. Right, let's move on to bonds. Definition first.
Bond is a credit. Credit is like, okay, the government is promising you or the company is promising you. There are corporate bonds and there are sovereign bonds. Sovereign bond is nothing but the government saying, trust me, bro. I like calling that. It's a trust me, bro technology, no different than fiat money. Trust me, bro. I will pay you back by printing more money, right, at some point. And effectively, of course, they're saying, okay, because we trust you, you have to understand that there are very few vehicles around the world which major companies or nations can interact with because of regulatory reasons. That's why they hold bonds. And or now, the next conversation will be about the gold. So effectively, those are the two major things that they can hold easily. And corporate bonds, also there's something called junk bonds, or which are high yield bonds, effectively, right, are similar because as a company loses value, they say, hey, don't leave us, we'll give you more yield or a coupon.
Yeah.
A government does the same thing. That's why they say the yields are rising on Bloomberg and everywhere else. They say when the yields are rising, people are losing faith in the government. How it works is that the bonds are traded and there's an auction for it, and people basically either there are no bids for it in the auction, or the spreads are widening, meaning that there are less bids for buying and selling effectively. Liquidity is like going away. Where is it going? It's going to the other asset classes. Because effectively, the underlying sentiment or the signal is that we don't trust you. You asked us to trust us. We don't trust you today. We might trust you again tomorrow, but we don't know.
See, I've talked about these kinds of things for a long time, and I spent a long time working for a financial magazine. But bonds as a trust me, bro, asset class is a whole new level for me. So I thank you for that. I feel like that's an education today. Next up on the list, this is number 5. Actually, 4 and 5 in lots of ways are similar, but specifically, number 5 is land.
Land, very important. It's one of the most accessible asset classes for many people in the world because it's there right there in front of you, nearby. People can buy it. But there are a whole slew of costs around it, middlemen around it, and there are layers of middlemen taking their cut. It's a very expensive asset class to hold because people don't realize that it's the middlemen and the government even taking taxes on it. Even though you hold land, there's always other costs around it. I mean, there are very few countries in the world which I don't think tax land or something. There's always a land tax somewhere or the other because you're always paying something around it, either maintenance cost or bare land itself, which is called a non-productive asset, is just used as a store of value by many people because they don't have any other knowledge or education around what to do with their money, or this is what their fathers, parents have told and society tells them to do. So yeah, but productive land is agricultural land, which is different. It's obviously creating value in the world, and it has different. It's not usually traded. It's used. You're using the land, right? You're growing things on it. You're making value out of it. So.
Okay, that's land. The next asset class, familiar to most people, I guess, something that most of us aspire to in one way or another, and that is property.
Property, again, very divisive subject, but accessible. People are culturally indoctrinated into it as a young age. I need to buy property. That's what you need to do. I mean, holding the asset gives them some kind of comfort, even though if you realize it's a giant liability because it's a decaying asset, effectively. The minute you buy it, it's falling apart, effectively. And one thunderstorm or rainstorm, whatever, there were some floods in Germany a few years ago. I don't know, 2 years ago, climate change. The houses were gone, everything, right? What do you do with that? I mean, your house is gone, right? It's over. There was a tsunami threat in Karachi a while back. What do you do with it? My friend called me up and said, hey, man, my factory, he created multiple jobs, is like, what's going to happen? Property, that's property, right? That's commercial property.
Yeah.
So those are all the risks around property. Also, people don't realize, again, all the cost around it. There are layers of cost around it. It's a permissioned asset. You have to ask permission to that person to sell it. There's no direct way to sell it quietly. There's no private way to sell it. If I want to sell it quietly, I mean, you can do it one-to-one, but usually if you want to get a good price, again, there's no price discovery around it because it's an illiquid asset. Land is also illiquid asset. There's no exchange around it. Maybe one day it can be tokenized and some efforts are going on around it. But until that day happens, there's no, again, keyword is liquidity. Everything is liquidity. What is that? The fiat liquidity, right? So assets are denominated in fiat at the moment. Is there someone in the room? If there's no someone in the room to buy it, or in the country to buy it, that asset has no value. There's no such thing as intrinsic value, by the way. That's an Austrian concept. Everything has value because someone has said it has value. Air has, I would say air is more important than, air, water has intrinsic value, but people don't trade it, so you can't trade it.
People don't trade it yet. That's probably a point. But I'm with you on property. Property is, as you say, an illiquid asset. It takes a long time to sell
Sometimes
a
never.
home. Sometimes never, absolutely right. And the point you make about permissions, I've been through very recently. I just bought a property in April. I'm now renting that property because I'm not in the country I bought it in. And the permissions that I have to go through, the tax issues that I face as I register, officially and properly. You're right, it's tricky.
Tax is very important. Chicago taxes went up, property taxes went up so much that the people living there say, I cannot afford the property taxes anymore. So what is it really your asset?
So it's a good point. No, be aware. Property I think I grew up with the concept that, you know, a typical Englishman concept. My home is my castle. It's, you know, it's the thing that I should have.
It's a global phenomenon.
It's standard everywhere, isn't it?
Yep, pretty much, especially Pakistan as well, and Canada, because a lot of people migrate to Canada. And then again, the core issue is money losing value. I would not blame. That's a symptom.
Yeah.
So money losing value, all the assets rise up. Everything rises up. It's an all asset bubble. Everyone talks their book. Why I say, what does that mean in the investing world? If I am holding whatever bags I'm holding, property, land, stock, Bitcoin, gold, I will talk my book. My asset class is the best asset class in the world.
Yeah, everybody has their favorite. But it's good to point out at this point as well that we're running through asset classes and defining them and outlining potential risks. This is not to favor an asset class over another one. This is just to put forward how they work, what it might mean for you. Gold and silver, precious metals is number 7.
Commodities, historically very important. We were on a bimetallic standard. People think that we were on a gold standard. The world was on a bimetallic standard, gold and silver. And gold was, even long time ago, people were using very giant rocks, by the way, to store value because they couldn't be moved. Again, going back to the liquidity part of things. So they said, okay, this rock has this value because it cannot be moved. Going back to supply and demand economics, everything is supply and demand in the world. Your salary, supply and demand. There are less people who can do this job. The market has put your rate on it. You can think whatever intrinsic value we have, we are that important, whatever the market says, whatever the price is, that is the real value of whatever the asset is or you're making, whatever. And same thing with gold and silver. Right now, gold is going up. It's called the debasement trade because the word debasement has now been marketed by Bitcoiners to outline the fact that money loses value, because before that, it was just this kind of very hazy, something is happening, no one knows how money is moving around, it's created. Now it's been more to the forefront that this is losing value because the US is doing certain things where it's creating a situation where it wants its money to lose value, so the more industry will go back to its own shores effectively.
Okay. The debasement trade, talk me, can you define that for me?
Define that. Debasement trade is basically when a currency is already losing value, but the speed of the debasement speeds up effectively, right? And all currencies, all fiat currencies are rapidly losing value. Some are more rapid than others. The slowest is the US dollar and the Western currencies, 2-3 of them, and the rest are falling in line. But they are traded in pairs effectively. So everything is a pair of, you can say a stock with the fiat currency, and then with everything is a pair. So when people say losing value, it's the money always losing value vis-a-vis to the asset.
So you say fiat currencies. All currencies are fiat currencies now.
Correct.
So a fiat currency is a currency not backed by a specific tangible asset. They're backed by the goodwill, the faith, the word of the government.
It's just a ledger.
Yeah.
It's literally a ledger, and they're effectively notepads flying around, notepad documents flying around between banks, syncing up those ledgers. There's nothing intrinsically interesting around it except for the new blockchain developments that happen, which are where you can see the ledger. It's also a ledger, but it's a ledger backed by encryption and math, which cannot be modified. But that's why you lose money in the banking system, because there is no one banking system. It's a distributed ledger where people are sending effectively their Excel file to someone else, and they say, just deduct this digit there and just add it there. And the central bank is keeping a giant ledger of things. So just to demystify what's going on. To be frank, paper money is still more useful than digital money because it is at least not permissioned. It can hold it, whatever value it's holding, it's with you, and you can move around with it. You can transact with privacy and you don't have to rely on technology, or more importantly, the government restrictions around it.
Yeah.
That's why, but more and more you see the paper money is being diminished and the roots are being cut off by everyone. Even going back to gold a little bit, the problem with gold as a commodity money was always final settlement. Final settlement is when you're trying to use it, but all the roots are cut off, right? You can't use it anymore. Oh, you have a gold coin. Sovereign, where did it come from? The coins or the silver coins. More and more the governments are saying, we don't trust you for maybe you're a tax evader, maybe you're a bad person. The default is you're default until a criminal, until something is proven, and then we'll see if you are okay to move your money around or not, which is happening more and more between banks, even within the UAE as well, by the way.
Things have certainly tightened up. There's no doubt about that. Well, let's go to that ledger that we, in theory, can all trust, but I'm guessing most of us don't really understand. It's a difficult concept to get your head around. First of all, you start with blockchain and try to understand how you define blockchain. Then you move towards Bitcoin.
Bitcoin is the first ledger to solve the blockchain problem, the double spend problem. And it's the only functional ledger, which is a complete product at this point, with some minor updates happening now and then, but most of it is complete. And the reason it's working is because, again, going back to the non-permission nature of it, people confuse blockchain with Bitcoin and crypto. Not really, it's a different thing. It's like saying gold is like the other metals. No, gold is gold. Even though platinum is sometimes, but it's the reason it is that the world has prescribed, effectively said, the government says this is our money, and the world said this is our asset. You can see it is an asset to someone. It's an asset who wants to be an asset. It's a money to someone who wants it to be a money. It's a way of freedom, by the way, to some people in Africa. It's happening where there are layers being built upon it, where they're using it as money. So it's a bunch of things to different people. So for the person who is trying to save his value in Pakistan, I know some of my family members, they are saving in Bitcoin because it's an asset for them. It's a safety. It's not losing value, right? It's storing value. For others, it's a trading mechanism because there's so much liquidity around it, 24/7, different exchanges, day and night, all night, everywhere, different platforms. Major thing which people understand is that the Abu Dhabi government sovereign wealth funds had bought into it $500 million, and plus they were buying more. It was declared. That's one thing. BlackRock. These companies will not go into something of an asset class like that with the lightly. It was years of analysis, discussion around it, and it's around Bitcoin. Everything else is a trading vehicle like crypto, which people call the other coins, which are copycat situations. They're fine if you want to trade, make some money around it, but don't think of it as a long-term store of value. Yes, there will be volatility when there is an early asset class. There's volatility around any asset class. Even UAE property had the same thing. When an asset class is in its infancy, the upwards volatility will exist. Upwards volatility meaning that it'll crash down, but it'll keep going up in the long run.
Yeah. No, that makes a lot of sense. It's still a very hard concept to get your head around for people who are used to cash. And more, we don't physically handle cash. So I guess we're moving in the direction of understanding that you don't have to physically handle your chosen store of value. Does that make sense?
Exactly. I mean, if you don't see it, and that's why the other some people part of our generation, not necessarily older generation, by the way, some people want the tangible nature of it.
Sure.
But the tangible nature is, like I said, that the roads have been closed around it. The settlement, the final settlement is the word. Liquidity and final settlement. What's the point of having an asset if you can't interact with it in safe way, proper way, smooth way, without interference? And you can't settle it. Settle doesn't mean that it's going to fiat. Can be you're exchanging it for something. People are doing remittances, completely legal to say to someone, hey, send this money to, in Pakistan, for example, do this charity work for me, and I will buy you Bitcoin. There's nothing wrong with it. Completely fine. There's not. I mean, it's a parallel transaction going on. Right? They're sending, and people assume that when you're doing fiat to Bitcoin transaction, it's not moving. The fiat doesn't move anywhere. It stays in the system. It's losing value because that's the design of fiat, by the way. People think that it's not. It's by some broken. No, it's a design that is designed. They say the 2% inflation target. Why does the 2% inflation target need to exist? That was a random number came up. The New Zealand Central Bank came up with that number. There's no science around it, by the way. Nothing. They just came up with it. So.
This is always the way with money and money markets to me. We forget that it's about people, and people appreciate different things in different ways. Some people like to have an asset that they appreciate, which may be a depreciating asset. It's just a nice house that you live in. But actually, as you say, maintenance is important. Just very quickly, we've got a minute, but you separated Bitcoin and crypto, which I would naturally kind of put together as an asset class. But you've separated them. Why did you
It's
do
very
that?
important because, like I said, even in the commodity world, there's the alpha commodity and there's everything else.
Right.
That's what's happening. And then look at the evidence. The evidence is clear in the last 2 years how it's working. Today's discussion is about every time someone comes in, they're talking about their favorite asset classes. They never talk about the risks. And we highlight all the risks about everything. And I would suggest to people that if they would listen to this episode again, they would understand where the risk profile lies, because a lot of people have a lot of risk capacity sometimes, but not risk, what's it called?
Risk
Tolerance.
awareness,
Yeah.
risk tolerance.
Risk tolerance is one thing, and there are risk appetite. So you have a lot of appetite, but you don't have the tolerance for it. Or sorry, you don't have the capacity for it. But
Right.
so if you want to go to the gym, you want to lift 100 kg, but you have a capacity of only lifting 50 kg or 20 kg. That's how it works, right?
It does.
And you can overextend yourself. So even if you listen to this episode and use it as a jumping point to investigate further on each asset class, you will realize, okay, now I know where I lie. I understand all the risks and the returns. By the way, the more stable an asset class, the least growth it'll give you. That's how the more risk you take in life, the more returns you get.
That's a good place to finish. Muzammil Shaikh, our tech and investing guru, with us on MIRA Business FM. Thank you.